G'day and welcome to another episode of Perth Property Insider. I'm your host, Jared Mann, and today we're back for part two of the inside story of how Cameron has gone with his investing and development journey so far. He's going to take us inside the North Perth development. He's just finishing off his learnings, how he built his team and some of the key people that have helped him along the way, as well as what he sees for the year ahead in Perth property and what are his plans for the future. So let's go inside.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management specialists servicing the whole of Perth. Now, here is your host, Jared Mann.
So what were some of the numbers so far? And I know from our chat, it is harder to know exact resale prices because there's not that many street front brand new townhouses that have been created yet. So on one hand, it's going to be a real unique, highly sought after property that if you did take it to the market, we'd probably set new price records for that type of thing. But on the other hand, we don't have, 5 comparable sales to exactly price it. So take us back to the original purchase and what you paid and sort of cost to date.
Yeah, no problem. Yeah, it's an interesting one, isn't it? It's complete opposite to the Nollamara property in many ways. Purchase price was $830K. It was $33,000 for stamp duty, $42,000 for subdivision, $20,000.
What were some of the things involved in the subdivision costs, if you can remember?
Oh, yeah, definitely.
People just brush over these things with that's easy. And I know you've mentioned that you had a few challenges.
I think I blocked some of them out. It was painful. But no, you've definitely got to enjoy spending money if you want to do developments. There's definitely a piece of advice that I've learned. Some of the I've got to have a look at the breakdown, but big costs some of the bigger costs were electrical, running power from the street on Scarborough Beach Road and then down to the back property, and having a mains distribution box because it was over. Is it 30 metres of run length of cable, I think, if I remember correctly. We did pretty well. We got in on the old scheme for the Green Dome, having that done. So it used to be overhead. We had to convert the overhead to underground. So that was probably 8,000 or 9,000 altogether. I think
big component. Yeah.
Just the electrical cost was like 6,000, just the electrician, I think. And then also, I think it was about $3,000, maybe 8,000, $3,000 for the dome at the time, I believe. So that was some of it. Plumbing, we had to do a little bit of realignment of the plumbing at the back. It was only the property plumbing. So that
to the house.
To the house. Yeah, there used to be an outhouse out the back.
Okay. So
we had to delete that and then just reconfigure the plumbing so it didn't go straight through the middle of the block. I think that was 4,000 or 5,000. There's a fair bit of cost in just fees for doing the subdivision.
Yeah, headworks.
I remember. Yeah.
Application all of that phase. Yeah.
Yep. So water corp, headworks. Yep. That was.
Did you have any fencing to do or any demo, or were they?
Yeah, we had really quite minor demo. It was just the yard was paved. It had a garage on the back that needed to be demoed, and it had the toilet that needed to be deleted. It was pretty reasonable, the demo. I think it was under $5,000 now. I think it was 4 something. But yeah, it was pretty. So that was reasonable. There wasn't any big trees or.
Yeah.
Well, there was one tree. I chopped that down myself. That's another experience. Don't chop down trees in spring. It's my advice if you can help it.
You learned a lot.
Yeah, it's been a really long. It's been 6 years now, I think, almost. So coming up to. So it's definitely been a long process. Definitely learned a lot. But
so what were some of the other costs in there? Then you got your architect fees. I think you said here $20,000.
Yep. $20,000. Holding costs are pretty low because we had to pitch in quite a bit of our own money. We were pretty good in terms of an equity space, although Nollamara did set us back a little bit. But because we'd had our 4th child and my wife was living at home now, and then when they put a factor on everything, as they do, and they forensically account you now, which I also found out. So pretty unenjoyable experience, all of it. But it was hard to get finance. And so, we put a lot of our own money in. And so that reduced holding costs, which is, I guess, one bonus of that aspect, and overall debt. But it wasn't easy at the time. So $5,000 for holding costs. Construction, so it's an architecture design, custom built townhouse. I guess we've gone for a spec that we think hopefully suits the area. Also, being it's a really quite a small block. It's under 200 square meters, and it's not, it's not an irregular size shape, but it's not a perfect shape. So having a design and build for that was useful, but it does pump up your construction costs.
You can't just cookie cutter it.
No, you can't just cookie cutter it. That's it. So we went in for a quality build that we thought would hopefully hold value over time and be well presented in the market, at least as an investment property, and hopefully, longer term, it won't just look like all the other properties that were built like that in the cookie cutter sort of regime. But it's 515, so it was a fairly big construction cost. We got 20K for the building grant, so the total cost for those two properties, the existing front house and the townhouse, is 1.427 mil. So a significant investment as opposed to the last one.
Yeah. And North Perth's come a long way over that period too. It's like really become much more popular. There's a lot of transformation going on. Cafe strip culture's sort of emerged, and these days I'm pretty blown away by what properties in there are selling for. So I think it's only going to be a really good hold for the future if you can keep both.
Yeah, excellent. That's what we were certainly hoping for, Jared, and I'm glad to see that that's the case. When I drive around there now, I agree. It's looking really good, and I've had some friends that have just paid 1.5 for a property out there. So, sort of a 3x2, nice little sort of California bungalow on about 400 square metres. So, the prices are definitely coming up.
Yeah, I've been looking to buy, and that's one of the sort of some properties have come up in, and I'm like, wow, this for North Perth a few years ago, it was nowhere near there. So yeah, good purchase. And what's some of the values, at least we've spitballed on it at the moment, appreciating that the townhouse could be worth more, and we've just come up with a conservative estimate on it.
Yeah, so look, 650K for the front house.
That's a 3x1, isn't it?
Yeah, so that's a 3x1. It's on 300, just shy of 300 square metres. So yeah, that's 650, which is good. I think it was some of those values were like in the 500s, a couple of years ago.
Yeah.
When I was looking around at stuff coming to market. So that's looking really good. There's some growth there. Also, Pennant Street, very difficult, like you say, to get a value on it, but hoping for something, north of 1 million if we were to bring it to market and sell it, which we're probably not going to. So may never realise that. But using that kind of million as a yardstick, I think that's a reasonable value. That's a $1.65 million total. So kind of looking at about 223K of potential equity there, which is 15.6%. So
yeah, pretty decent margin, and hopefully you can get a decent bank val on it to help your future plans whenever that time comes too. I think with the upside ahead this year, and how much longer have you got to finish, do you think?
It's projected to finish at the end of March, and then handovers in April. So yeah, it sort of has been slipping, but we've done really well. We only started in building in May of last year. So that's when the slab went down, and I guess that's one of the beauties of having a more bespoke building company. They didn't go down and put a whole lot of pads, and they can actually achieve the build. Yeah, so it was going to be, initially they were talking about 7 months, which I was just like, I just can't see that happening. And then it's gone out to 10 months, maybe 11, we'll see. But I still think in this current market, that's pretty reasonable.
Yeah, and it's 2-story too, so that adds extra complexity for them, no doubt. So, and what do the rental prices look like? Hopefully we can bump the front up a bit more soon, and the way that the fever's going in the rental market, you may get more than what we're thinking here for the rear new one as well. But how's it looking on that side?
Yeah, I've just re-signed Scarborough Beach Road at 400 a week, so that's reasonable. It has been below that, lower in the cycle, definitely. 46 Pennant, we had, I did some work with, you put a number, I think there's a number down here that was done, some work with Dwayne to sort of work out, appraise what it might get. That was a little while ago now. And we were looking for north of 700, and that was for the bank basically. But yeah, he was saying 7 to 750. Look, I don't know, I'm really not sure. That probably look to you guys for advice, but I haven't really chased it up until, it's a finished product and something.
Yeah, when we can see it and walk through it, it's entirely different. And yeah, in this market, we're getting tenants offering, above asking, and we can start high and test the market and see where we end up in the first, 4 to 5 days, and might jag a 800 or 850 even, who knows. So it'll be exciting to finally get to that phase.
I'm looking forward to that bit, Jared.
You'll have to have some drinks there or something, just to celebrate that moment, because it's been a while coming.
Yeah, we do have a little tradition of doing things like that. So we normally go and have a little a little drink and do a little celebration, with the family, because it is always a family thing.
And what sort of cash have you put into this one? Just to give people an idea of the size of the project, and people often underestimate the cash that's needed when you have to pay for things like subdivision and architect fees yourself. It adds up quick, and people have in their heads, we can do everything for 20 grand or 30 grand when it comes to a subdivision. But
so it's been completely different to the other one again, in that we've had to put a lot more money into this. We're financing it ourselves. So the deposit to get into the purchase, so drawing on equity in the other property, and trying to maintain a sub 80% LVR, we get put 152 in when we first bought. After
it's
that,
not to pay lender's mortgage insurance when you can avoid it. It's just lost money, isn't it?
Totally, yeah. It certainly irks me, the idea of having to pay that. So I'll do everything in my power to not, just about, if I can. It'd have to be a really good opportunity, I guess, for me to do that.
Yeah.
Subdivision cost was 42,000. Architect's fees were 20,000. So to pay for all of these things out of the back pocket. Then we came to refinancing. I was hoping that we'd just be able to refinance and run into it, and there wouldn't be an issue with having to stub up too much money, but that changed over time with different lending conditions, as well as drop in the market. We ended up having
challenges.
Yeah, we had to put
ideally,
in
if you'd moved it forward in this market, you could have valued on the back, hopefully not put anything in or little.
Yeah, that's exactly it. And time is everything, isn't it, when it comes to these things? So it is what it is, and we would sort of desperate keep the project moving and not just sit on it. Just having that old house in the front wasn't giving us a great yield. We had to tip a fair bit of money in. So refinancing, we had to find 111,000. I was sort of thinking maybe it was going to be somewhere below 50. So a lot of our contingency got snapped up in that, which is probably not ideal, but it is what it is. And then we've also added some variations because we were really pushing to get in time for the building grant, despite we've been so ready and we'd planned things. When COVID hit, we paused, and then after COVID, everything went nuts, and trying to get simple things done like structural engineers work, and everything took a lot longer. So we ended up going with a base contract. We actually weren't sure what we were going to get in finance at that point either. So we went with a low contract, and then we had an agreement with the builder that we could make variations without any variation fee. Okay. But we've ended up with like 56K of variations, sort of bring it back up to the spec that we wanted it at. So all those things had to get all that money had to be found, and it's no small amount. It was like in total it's 381K, which is, I think this is the first time I've added up all these numbers together. I don't know if it's
sorry to look at that for our episode. You got a fair bit of money to pull out when this thing's finished. You're looking forward to March now.
It would be a lot worse if we were looking at it and there wasn't a profit margin in there, I think. Yeah. So look, I'm really happy. I was thinking the Perth property market was going to go for a long time. I've been listening to you for a while, Jared. I know you thought the same sorts of things, and we had starts and then pullbacks, and so it's finally things are looking more positive. So that's good, and it's certainly helping us.
So, what were some of the learnings on this one? I know you've mentioned a few on the way. Any key takeaways, perhaps?
Yeah, look, it's a really good question. It's always easy to look backwards, isn't it, at something? And but based on the based on the information we had at the time, I'm not sure that I would do many things differently. If we'd known how everything was going to pan out, maybe I'd have gone and bought a property in Sydney.
Just set to get and revisit in 5 years.
Yeah, totally. So that's.
But you may change that.
If I had a crystal ball. Yeah. So I think it's been a really good learning experience. It actually looks like it's performed pretty well. We really stretched ourselves to get into a property, the best property we could, the best area we could, and I think has and will pay dividends. Although it's meant that it hasn't been easy, and we've had to really tighten our belts over some of this period of time. But definitely some of the things I've learned is that, doing subdivisions and developments can be a way to add value, but they can be really complicated as well. There's like a lot of pitfalls and challenges, and there's uncertainties at the time when you're making decisions too. So there's no crystal balls. There's risk in everything you do. And when you start doing some of these things, I guess it increases the level of risk to a degree. Also, as I've probably mentioned, it can be very expensive. So there's a lot of costs there that you may not be aware of if you're not experienced in this sort of thing. If you don't have good advice, there's going to be stuff that you're not prepared for. And even if you do, there are probably things that are going to come out of the woodwork that you weren't ready for. So probably having things like contingency is important. Probably one of the other things would be just being involved to some degree. I think, it's nice to just put all responsibility to someone else, like whether that's an advisor or another company. But at the end of the day, you've got to make some decisions on your own, and effectively no one's going to care about your investment as much as you do. So I've really found that it pays to ask questions, and it pays to challenge things as well with certain things that come up, and you'd be surprised. You can actually make a difference, even when you aren't the expert in the room or whatever. It is your money, so it always pays to at least have some understanding on what's going on and not completely hand it over to someone else.
I guess you really moved into a position of responsibility and actually being the driver of this one, whereas your first one, you were along for the ride and just learning as much as possible, and no one can tell you how to own that, So yeah, I'm sure when you look back, you've, stepped into a new place with your investing, and you might, I'm sure you're going to take that forward into whatever else you do now. So
totally. Yeah. I think it's, I really enjoyed the experience, despite it sounds like it's a roller coaster ride of highs and lows, but I really enjoyed the challenges that were posed. There was always a challenge. It was like, as soon as one challenge was fixed, there was another challenge that came up. So, and getting through that has been quite satisfying. I think you need to definitely do your due diligence, but as long as you've done the due diligence and you don't have a big blocker in there somewhere that you haven't, done a proper dive before you dig, or something to do with the property and easement or something like that you're just completely not aware of. Most things you aren't insurmountable. So that's been quite enjoyable, is the problem solving aspect of it.
Yeah, cool. So what were some of the key people that you've had on your team to make things easier along the way?
My beautiful partner Sarah, she is fantastic on that. Yep. That's a shout out, definitely. Yeah, and deservedly so. She's fantastic with research. She puts me to shame. I just don't have the tenacity that she has for it. I do like research, but she can really go deep. So she's been fantastic, and she's really good with the design aspects of things and planning and sort of thinking outside the box on that kind of stuff. So she's fantastic with that, and she is definitely one of the most important people on our team.
Yeah, well, it's great that you're doing it together and you're on the same page, because a difficult investment or projects can either bring people closer, and you come out of it thinking with a stronger relationship, or I've also seen it separate people, unfortunately. So when the
I'm sure applied. Yeah, I think we're really lucky that in terms of the development stuff, we've been really on the same page, and that's really helped. And compared to bringing up 4 kids, actually, it's really not too bad.
Good one.
Things are relative.
So who are some of the other key people on your team?
Our mortgage broker. I've got hundreds of emails back and forth with my mortgage broker. I do feel for him, actually. I don't know. I hope he doesn't calculate his hourly rate or whatever. Yeah. The amount of work that he's done just trying to get us financed at different periods, it's been a challenge. So I think having a mortgage broker who understands investments and is ready to take on people and put in the work for a client that is going to be more difficult, like myself. I think that makes it
not intentionally difficult, but just the nature of what you're doing when you're doing a project and pushing the boundaries, and then having royal commissions and other things thrown in the works never makes things easy. I apologise to my broker all the time as well, and say, I bet you're glad your other clients aren't as complex as me. We help them, further their trade and skills, and if they can deal with us, then they can. The straightforward finance is a breeze then.
Yeah, totally. I had another friend that's a mortgage broker, actually, and we were just having a birthday party for one of the kids and having a chat, and he was talking about his business, and I said, you don't want clients like me, and we'd just gone through what we were doing, and he was like, no, I don't want that. So he's pretty honest there.
Yeah.
He's obviously got a fair bit of business at the moment as well, I suppose.
Yeah. So any other key people that have got you through?
Definitely our accountant. He's a very investment-focused guy.
That's good.
And he's been very helpful with maximising our tax position and giving us some advice on different things we should or shouldn't or could or couldn't do. So I think there's definitely a shout out there. He's very integral.
Have you just gone personal names with stuff so far? or have you got it in
Yeah.
any kind of other structure?
No, we've gone personal name basically so far, and that's all about maximising tax returns in the earlier years. I've seen this. You've had a podcast recently, and I've heard other podcasts and thought on it. And I used to be a type of accountant, so I've got a few ideas. More of a management accountant, but yeah. So it's an interesting
I've more
one.
come back to simplicity as well these days. Like Karina and I are just buying in personal names, but I do at least have the business that I can distribute to, so I kind of get the best of both worlds. But the banks have changed so much as well with their lending, and it decreases your options as well when you throw a company or a trust into the mix. So
yeah, totally. And we've kind of needed to maximise our tax position as much as possible in these early years. Otherwise, we probably just wouldn't have been able to do it.
Good one.
Also, architect and builder. Definitely, our architect's been fantastic. We did the design with him, and then we opted to go for a building company that he's a director of as well.
Okay.
We looked around a fair bit at that. So it was he project manages it through that build as well, and it's a kind of like a design and build, I suppose. He's got some pretty strong linkages to City of Vincent around where we're developing to, and so that's been invaluable having that advice, as well as hopefully bringing out a good product. But just that knowledge of what you can and can't do is really invaluable. And then also designing something and being able to build it for a reasonable price, I suppose, as well.
I'm looking forward to seeing that product when it's all done.
Yes, totally. And also, Jared, of course, I've got to give you a shout out and your business for helping us along for the last, what is it now? Coming on a lot of years now, actually.
Yeah.
7 years with this one. But I think Nollamara was rented in, what was that, 2010?
Yeah, I think it's 2010. Yeah.
Yeah. So, I'm not a property management specialist, and I don't want to be one. So having someone who's able to maximise the yield that you get out of your property, help you protect your asset, make sure you've got the right insurances, put the right tenants into that property, and minimise your vacancy rate. That's like what you guys have done, and you guys are experts at that. And yeah, that's really important to have one of those, a very effective property management specialist on board, I think.
Yeah, cool. Appreciate that. And I certainly appreciate your business over the years.
No worries. It's good.
So what do you see for the year ahead for Perth property? Because it's just good to get your take as another investor on what you're seeing out there. And we've got a lot of East Coast listeners that don't have the benefit of being on the ground as well. So
yeah, look, I mean, for what it's worth, my view, I still think Perth's undervalued probably, compared to the rest of Australia, maybe with the exception of Darwin. I think Perth prices have really sort of diverged lower since their highs, and they're probably undervalued, at least historically they are. And
I don't think anyone's going to argue with that.
No, I don't think anyone is either. Most are kind of forecasting around that sort of 10% growth for 2022. But I think given Perth's affordability, sort of, where we are in terms of supply, likely demand with migration, if and when the borders ever open.
Things have changed since the time of thinking on this question.
It has, yeah, exactly. Obviously, with the borders now remaining down, but what happens in that space is uncertain. But what is certain is we've got like loads of jobs.
When it does happen,
Yeah, it's a when, isn't it? It's not an if. We've also got excellent yields and increasing rents. So I wouldn't be surprised if Perth outperformed that in 2022 and starts to go some way of redressing that balance. In saying that, I've been wrong before, and I thought that would happen quite a while ago with Sydney and New South Wales and Victoria, and it didn't. But I think it's got to happen at some point.
Well, hopefully we have no other shocks or black swan events as we were talking about. We don't need any of them on the radar for a while.
Yeah, that's definitely the caveat, isn't it? There's always uncertainty. Things can happen. Interest rates could suddenly raise quickly, and that would change things. Or who knows, the next variant comes around or something.
So what's next for you? Finish this project in March and get a tenant in there, and what are your future plans and on the horizon?
Yeah, well, I've alluded to it before, but I think really is time for us now to start looking towards our own home, getting a principal place of residence for ourselves. So we haven't looked at it too strongly yet, because it's just not an option. But we've got a few ideas what we might do. So we'll see where everything lands and what the financing and things permits. But that's definitely, I think, that kind of acquisition is something we'd like to do going forward sooner rather than later if we can. Also, I guess the front house at the old house. We might renovate at some point, at least to a cosmetic level, to see if we can boost
the rent.
That'd be good. Yeah,
get a bit of a value add.
Yeah, bit of a value add. What that looks like, I'm not sure. I wouldn't want to overcapitalise on that, I don't think, at this point. But yeah, I think there is an opportunity to increase the yield to a point where it would make sense to do that. But I won't be doing any of that before the building boom comes off a bit. That's for sure. I'd time that one. Like to try to time things if I can.
Your tenant in there is doing an amazing job. I looked at their routine inspection report in preparation for this when I was appraising it. So, yeah, they've certainly made it home, and they've got lovely furniture, lovely plants and other things about. So, yeah, hopefully we can keep them for the long term too.
Totally, yeah, and I totally agree. Yeah, it can be, when you've got an older house property, it can be, difficult getting the right tenants in it. I think you've alluded to that a lot of times before, Jared. But yeah, that's certainly, we had a little bit of that at times. Nothing terrible, but just people coming and going more transiently, I suppose. But these ones seem good, so yeah, hopefully they stick. Don't like to have to relet if we can't. Do we? But then, really, I guess it's I haven't got firm plans past that, but definitely being poised for looking out for future opportunities. I think that's what we'll be looking to do. It's down the track a bit, and it'll really depends where everything is. Where you end up
with the home. And
yeah,
do you think you'd ever take a step back on selling a property if you had to, or were you hold forever? The reason I ask is I've just recorded a podcast on it, so it's fresh in my mind, and it'd be good to get your take on whether you're ever going to sell.
I haven't listened to that one yet, Jared, but I'll be sure to. Look, I don't like selling them. I haven't sold any of them yet. I'd prefer not to sell them. I think ultimately property, we've seen property increases over time, and there's transaction costs with selling properties. But never say never. If it was something that needed to happen to fulfill a need or something, then yeah, it's definitely possible that we could. I'm not planning to.
Cool. Well, thank you so much for being open and completely transparent, and really think it's going to add a lot of value to people to see your journey. And thanks for coming on the show today.
Thanks, Jared. Really appreciate having me on.
Have an awesome year ahead, mate.
Thanks, and you too. Cheers.